Ladies and gentlemen, welcome back to another Bitcoin update. Let's talk about something interesting today. Whale transactions, right? Because a lot of the bearish argument right now, there's two sides to the bearish argument, okay? One side is macroeconomy, which we've debunked on multiple occasions, okay? And the other side is whales. The big claim people are making right now on Bitcoin, the bears are making, is that whales haven't bought the lows and therefore we shouldn't buy the lows. Because obviously their logical conclusion, right? And it's not a terrible conclusion to make, it's kind of logical to a certain extent, is that if the big money, the people who control the market manipulators, the whales, right, which is meaning people who hold a lot of Bitcoin, haven't bought the lows yet, that probably means the low isn't in yet. That's what they're saying. Now, I disagree with this for many reasons, okay? I understand the logic, okay? But I don't think the logic is strong enough to ignore TA. Because what people are doing at this point in time, they're ignoring TA. If you are a believer in the fact that the whales haven't bought and therefore you shouldn't buy yet, you're ignoring TA. You've missed out, and it's not my opinion, you're ignoring TA. You've missed out on a move that has been almost 2x, an 88% move you've missed out based on a sentence, based on, oh, the whales haven't bought yet, therefore I'm not buying. That isn't even necessarily true to the extent of which you might think it's true. I'm going to show you a few charts on chain. I'm going to show you a few charts, in terms of the actual price action as well, and I'm going to give you a logical reason why, even though the whales aren't buying to a particularly strong extent as they were in previous cycles, that doesn't necessarily mean the bottom is not in. Okay, so let's get into it. All right, so we have a few charts to look at. Okay, first and foremost, we have a few charts here. I'm going to go ahead and start with this one, right? Because, okay, look, here's the thing. On-chain data is one of those things where you can find charts that fit your bias with. Okay, there's hundreds of on-chain charts. Take this website, for example, Glassnode. You can go on Glassnode and you can literally go through probably 300, 400, probably 600, 700 charts, to be honest. There's 600 or 700 on-chain charts, if not more than that. Obviously, there's going to be charts that fit each bias. If I wanted to go on Glassnode right now, pay $700 a month for a membership, which I'm not going to do because I don't see on-chain as important, right? It's a waste of time in my opinion, and I'll explain why. Pay $700 for a membership per month, go on there and find 10 charts that really support my point of view that the bottom is in. I could do that quite easily, right? But I don't see the point in doing that. It's a waste of time because I could just as easily go on the same website and find 10 charts that support the view that the bottom is not in. On-chain data, right, is cherry-picked. It's selected. And they post these charts on Twitter and they make an argument around it, but they could quite easily find another chart randomly and just post it on there and make an argument about that. The thing with on-chain data is it's very subjective. What you see on the charts doesn't necessarily mean anything, and also it's not objective, right? It's subjective, as I said. The thing with price action charts is that yes, they can be interpreted in different ways, but at the end of the day, an ascending triangle is bullish. That's all it is. There's nothing else to it. At the end of the day, it can be interpreted in different ways. Yeah, this overall structure can be seen by a few different ways by a few different analysts. But at the end of the day, if you're in an ascending triangle formation, you're in an ascending triangle formation. That's a fact. There's nothing that is bearish about that. There is a level of objectivity in TA and price charts that you simply do not get in on-chain data. And this is why I take problem with people utilizing on-chain data like whale transactions to go ahead and say, oh, the bottom's not in. Whale transactions is simply one on-chain data chart. What the whales are doing is simply one aspect of on-chain data. I could easily find, as I said, 10 charts on-chain that show me that the bottom we've had now is happening in the exact same way we had in previous cycles. It doesn't matter what the chart says. It doesn't matter what whales are doing. It's irrelevant. What matters is the TA. Now look, just to kind of give it credit. So say, for example, it did matter what whales are doing. Let's go ahead and just analyze a few points here. And, I'm not really showing anything on the screen right now. I'm just talking, but it is important information that I'm giving out here, okay? So, for example, whales aren't buying to the same extent as they were in previous cycles. That is true. That is a fact, okay? But they're not selling either, okay? They're not selling either. Look at this chart down here. I'm going to maximize the screen here. They're not selling. Addresses with 10K balance in Bitcoin. They're sideways, right? They're holding, basically. And they were buying, okay? So they were buying quite massively. They were stacking their Bitcoin. And there's heaps of evidence to suggest that even smaller whales, right? So smaller accounts with like 1 to 10 Bitcoin have been stacking throughout the entire bear market. And the amount of actual whales has decreased. So they're not selling either. It's not like they're, dumping their Bitcoin in this 28K price region. They're just not really reacting, okay? And there's many reasons you can get into as to why they wouldn't be reacting. Now, first and foremost, if the market hadn't actually bottomed, right? If the market hadn't bottomed, okay, and the whales were correct in not buying the lows, that's kind of stupid, right? Because they missed an 88% gain. Okay, so if they're so smart, if they're whales and they're market manipulators, don't you think they would have caught the 88% gain? That's one aspect of it. The second aspect of it is this. Whales are generally corporations or people with investments in other asset classes. When interest rates get higher and higher and higher and higher, these corporations don't necessarily have the spare capital, right, on their balance sheet to go ahead and chuck millions of dollars in Bitcoin because they're tied up paying debt on other investments, on other, loans they've taken out, etc., which corporations have plenty of. When interest rates goes up, these people don't have money to throw into Bitcoin as well. That could be another reason. So there's two reasons right there I've just given you that as to why whales could not be buying in this price region, and also they're not even selling anyway. So it's not like it's a particularly massive big deal in my personal opinion. And also the number of whales as a total is going down, just like in previous cycles before the bottom, and it's kind of evening out around this point in time. And the kind of what would you call them? Big fish. They're not quite whales, but they're getting there. 1 to 10 Bitcoin. That's risen up dramatically during this bull market, just during this bear market. So that could be driving the move. Whales aren't the only people who drive price action, guys. It's very important to note that. We've also seen this orange line represents the number of new Bitcoin addresses being made per week, I'm pretty sure, okay? And as you can see, per day, I think. As you can see, that is on the uptrend right now. Ever since August 2022, there has been an increase, an incline in the amount of new addresses made per day or per week, whatever this chart is, which is kind of exactly what's happened in previous cycles. For example, in 2018, around the middle of the bear market, we saw an incline start to happen, and the same thing happened down here in 2015, towards the end of the bear market, towards the middle of the bear market, we saw that incline start to occur where I'm circling with my cursor right now. So everything there is completely normal. The Bitcoin network, whatever it is, and the blockchain is extremely active in that regard. The number of total addresses is obviously uptrending as well. And of course, if we're looking at active addresses, so this is the people who are sending and receiving Bitcoin within a certain period of time. I'm not sure what that certain period of time is, but what I can say is that is kind of trending sideways. It's actually started trending upwards ever since December, which is when the move started. So that is completely normal as well, right? It's not like the blockchain, it's not like Bitcoin or anything like that, is dying out. Not at all. In fact, we're seeing an incline in new addresses being made, and we're seeing basically sideways action on active addresses, so nothing really too unique there. But I'm just saying all this to point out the fact that on-chain data is not everything. And I gave you a couple of explanations there why whales might not have been buying to the same extent as previous cycles. I think the main reason is interest rates. They don't have the free capital. Whales are generally corporations. They can't justify making investments at this period of time. And another point I made was pretty interesting as well. It's like, well, if the whales really determined everything, they knew everything that was going to happen, which is what you'd be assuming if you thought the bottom was in because the whales aren't bought, right? You'd be assuming that whales know everything. They know what's going to happen next. Don't you think they would have taken advantage of an 88% move to the upside? It's not like this has been happening over a short period of time, right? This hasn't been a short-term swing trade, which obviously whales can't take advantage of short-term swing trades, right? But this has been a 5-month period, okay? If you're whales, okay, you would have bought down here if you knew an 88% move in 5 months was coming. That's a decent period of time. That's enough time for you to position yourself as a corporation, okay? If the whales really knew everything, they would have positioned themselves to take advantage of this move. They did not, and hence, you can logically assume that the whales don't actually know everything. As much as people want to believe that the market is ridiculously manipulated and every single move is fake and everyone knows what's going to happen 24/7 in corporations on Wall Street, it's not actually necessarily true. They have more knowledge than us. They have more information than us, of course, right? More insider information, but they don't control every single move that occurs, okay? They're not actually, making every move happen. TA does exist, okay? Triangles work for a reason. If every single thing was manipulated, TA wouldn't work. The reason why we see fake outs is partially due to manipulation. But the fact of the matter is my income is predicated on TA working, and TA doesn't work when there's manipulation. So the fact of the matter is the vast majority of the time, the market's not actually manipulated. Perhaps you're just bad at trading, okay? If you're losing money and you're blaming the market every single time, you're blaming market manipulation every single time you lose an investment, perhaps you're just bad at trading. I hate to be blunt, but that's just a simple reality. Of course, there are periods of time where we do see manipulation, but it's not constant. So let's get that out of our heads right now. But overall, it just seems like a silly argument to make, saying, oh, the whales haven't bought yet, so therefore I'm not going to buy. It's like, well, as we said before, they haven't bought, but they haven't been selling either. And also, are you just going to ignore everything else? Like, what about every other aspect of TA, every other aspect about investing and, trading, whatever it is, and market analysis? You're just going to ignore all of that because of the whales? in a market we've never seen before. We've never seen Bitcoin react to QT before. You're going to ignore that because of the whales? What about the 4-year cycle theory, which has been consistent more than the whales have been consistent? This thing has predicted tops and bottoms to basically the week on 6 separate occasions. 3 tops and 3 bottoms. Are we going to trust that less than the whales on the on-chain data? What about the fact that, even just looking at this month of April, the month of April, for example, which is significant because we're at a very critical level right now, 28.8K. So the month of April could actually be a big deal in terms of getting above that level. I'm circling points in which we've held this for support and resistance. If we get above that level in April, that's a massive deal. So what about the month of April? Well, we're not going to just discount the fact that the month of April has been generally the most bullish month in the entire history of financial markets ever, right? April's generally, on average, the most bullish month ever. We're going to ignore that because of the whales. What about the fact that, every single bear market? So right now, I'd say we're still in a bear market technically, but basically the downside year, which is 2022, 2018, and 2014, they're all negative years. But the years after that, so the first year of the new cycle, generally, over monthly returns, I'm highlighting areas right now that you can see on the screen. They are extremely bullish years. Are we going to ignore that as well? We're going to ignore all of this just because the whales aren't buying. Come on, guys. Let's be logical here. Let's understand that, that obviously isn't bullish that the whales aren't buying, but it's not everything. And I feel like that is basically all the bears have at this point. That and the vague arguments about the recession and how that's going to drag Bitcoin down, which is just as speculative as what I'm saying, because we're entering QT. First time we've ever entered QT in Bitcoin's price history. We've never seen how Bitcoin's going to react to QT. Okay, that's a fact. So why is what you're saying more compelling what I'm saying? Okay, it's not. And mine is actually backed by the charts as well. Yours is purely speculation. So I don't agree with it at all. But, another thing I wanted to look at today was the short-term price action, because we haven't looked at it in a couple of days. It's just boring. It's same old, same old. That's why I didn't dedicate this video to it. Essentially, we're just pushing against 28.6K, 28.8K on lower time frames. We're yet to close a 4-hourly candle above that level. As you can see, let me get it up here. We're rejecting quite heavily from that red line. It's just same old, guys. We really need to be looking at this yellow uptrending line stemming back from October here. That is our support line, and 28.8 is our resistance line. Eventually, we will make a move. It's hard to tell when we'll make the move. We're not really seeing any clear market pattern right now, unfortunately. Still, the apex of this formation between the yellow line and the red line comes at late April, around the 24th of April, so we will be making a move before then. But I would be expecting a move sometime this week, to be honest with you. I think, we've seen 19 days of consolidation at this point, and, 19 days of consolidation what it means is that, this level is very important. That's the fact. That's the fact of the matter is, if you see 19 days of consolidation below a level, the market is literally telling you, it's screaming to you, this level is really important. That's why it's taking so long. So, it's taking long for a reason. Patience is a virtue in a financial market, and knowing when to react is a virtue as well. Right now, we're in a range between 26.6K and 28.8K. Until something happens there, it's the same old range, and hence it's the same old message. I'm still encouraging people to not take long positions. I don't think you should be longing into one of the strongest resistance zones Bitcoin's ever seen. That said, I don't think it's not going to break. I think it will be broken eventually, but I'm just not sure whether we're going to see a correction to the downside first. We very well could see a correction down to 25.2K or something like that, and then come back up and break it in the future. I think this is one of those levels where you need to wait until it's broken and then react. You don't try to predict a break above it. And that's really been evident in the fact that it's taken so long to get above it, right? That's the market telling you it's very, very strong, and we shouldn't be trying to front run this move, I don't think. So that's my opinion on short term there. Perhaps we'll dive into that a bit more in future videos, and perhaps tomorrow, we'll see. But guys, I currently do have a VIP sale, as you can see on the screen here, 25% discount on VIP memberships. The VIP group trades altcoins on Telegram, right? So if you want to trade altcoins with me on Telegram, 25% discount until the 14th of April. This is your chance to do it. I recommend you get in there. You can see the results from our previous trades for Q1 and Q4. Very, very profitable stuff. 3,400% profit in Q1, which is amazing. And Q4, you can check it out. It's all on the links in this community post, and I'll put it in the description below. So go ahead and check all that out. It's very important. We have the BitGet exchange as well. If you want to learn how to if you want a place to trade, right? You want to trade on an exchange that I see as reputable, that I see as a good exchange, that I see as a cheap exchange as well, 5 times lower fees than Binance. Optional KYC, holding up to the fundamental values of cryptocurrency. This is the exchange for you. So get on BitGet, sign up using my referral link in the pinned comment below. 15% discount on trading fees for life on the exchange is included in that. You can save thousands of dollars just by using that referral link. You're helping yourself by getting on a good exchange, and you're helping out the channel as well by supporting me with that referral link. So go ahead and do that if you're interested. And then finally, guys, the Crypto Academy. If you want to learn how to trade for yourself, you want to learn how to analyze charts on TradingView for yourself, how to find trades, how to utilize all the information you see on the charts effectively and turn it into a profitable income stream, this is the place to do it. Become a trader 10-unit course developed by myself and Megawell Crypto. The website link is in the description below. You can read up all about the course on the website and throw us an email at this email address link on the website, cryptoacademycourses@gmail.com, if you have any questions, and we'll get back to you swiftly. Thank you guys for watching. Hope you enjoyed, and I'll catch you in the next one. Cheers.